The National Flood Insurance Program has a history which goes back to the 1920s. And the Mississippi River floods of the 1920s convinced the flood insurers that they couldn't profitably write policies anymore. So the flood insurance market changed in the 1920s. There wasn't much action around flood insurance in the 30s. After World War II, though, floods are continual, and if people don't have insurance, then they've got to find other remedies to make them whole again after a flood. And so we begin to see rising costs, particularly as people start building in areas that are potentially hazardous to flood, coastal areas, riverine areas. So there was actually attempts to create a subsidized flood insurance program in the Truman administration, in the Eisenhower administration, in the Kennedy administration. So pretty much straight through from the end of World War II up to the 1960s, every administration is taking this issue on. And there's good, solid sort of political blocks trying to move this, right? I mean, if you put all the Gulf Coast states and all the East Coast states together, you've got a pretty strong power block. So it's continually being put forward on the policy agenda, but nobody can quite figure out how to make the system work. And so the Johnson administration, Johnson orders a study. The science by that point had evolved, particularly sort of the science of floodplain management, which you wouldn't have necessarily called a science up to that point. And it was very interdisciplinary science. The leader in this area is a man named Gilbert White, who was a geographer and really a brilliant guy. I mean, he came up in the New Deal. He was he was at the University of Chicago. He looked a lot at floodplain management in Colorado, for example, and said, here's the underlying situation, geographical situation. Here are the potential impacts of building in this area. So he actually starts to connect the impacts of development to the underlying geography, and that really hadn't been done before. And so he was tapped to be part of the study that the Johnson administration ordered. And one of the things they were tasked to do is not just to try to make sense of the flood problem nationally, but to suggest policy remedies. And a flood insurance program, a nationalized flood insurance program, was on the table. And so they began looking at that. Their conclusion of the study was, yes, we do need a national flood insurance program. The question is, at what scale do you do it? Do states manage it? Are we going to allow individuals to do it? The conclusion that they reached was that we needed what we might call a quid pro quo program at the community level, because most land use decisions are made in the United States at the community level. So that's where they would focus, and they would say to counties, basically, if you will undertake rational floodplain management, we will extend to you subsidized flood insurance. And the federal government subsidizes up to a certain amount, and then the private insurance market is able to then come in because they know up to a certain amount they're covered, and then they will write policies above that. And that was the situation when the flood insurance program took effect in 1969. Initially, it was not successful. The first several years, just getting the word out was hard. Getting action at the community level, getting people to come together in communities and really talk about land use planning, floodplain management was new to a lot of communities. And so it took some time, so they brought in some more carrots and sticks. And the main stick they brought in was, they said, if you've got a government-backed loan, then you have to engage in this work. You have to, if you're in a flood hazard zone, you have to take out flood insurance. And so they brought that in the early 70s, and then the number of communities that enrolled skyrocketed throughout the 1970s. In fact, they couldn't keep up with the demand for flood insurance throughout the 70s and 80s.